Yeah, welcome back to my channel. Uh, we're going to be sharing an update on the um, Ford stock. I talked about this in my last video, my most one of my most recent videos, and this is coming as a kind of a closer look, a deeper dive into this company and into this stock, so that we can have a more um, complete view uh, about it. Um, the first thing first is that this video uh, is not about providing financial advice for you or for anyone to buy, hold, or sell the particular stock that we are discussing here. This is only for educational and informational purposes. And in fact, it's just our own way of having fun with stock market education. So let's go into it. Um, we have to talk about the broader dimension of this particular company. Where does this company belong within the broader market trends? There are two basic trends. One is called secular trends. The other one is called cyclical trend. This idea about secularity and cyclicality is very important for evaluation of the company and the stock. Secular trend uh, is the trend is belong. I mean, describes the products that are likely to be making companies that are likely to be making money in any given economic situation. When the economy is good, they are in business. When the economy takes a downturn, they stay in business. They don't lose much value, and they don't. People continue to have a need for their products and continue to buy them. The auto industry in general um, do not belong into that category. They do well when the going is good, when the economy is good, and when the economy takes a nosedive, it impacts their sales, it impacts their revenue, it impacts their profit, generally speaking. Although you may exclude um, companies like Tesla or whatever from this for other reasons that we are not going to cover here. But generally, the auto industry belong to the cyclical trend, i.e., they don't make much money when things are not when times are hard. The second thing that I also want us to take into account is that the is about the high and low margin industries. What we mean by this is that companies that are able to sell their products at a high with a high margin of profit versus companies that don't have that option and don't have that opportunity, and they better lower the price or sell at a relatively lower margin of profit. The auto industries in general, they also belong to this category, and Ford is not an exception. This is an industry with a lot of competitions, and as we can see now, there's a lot of competition internally. How many companies do we have in America that's competing for car consumers' attention and money? You have Toyota from non-US based companies. You have Honda, you have Kia, you have all of these things. Not to talk of Chinese made cars that are about to descend upon us. And then from the local companies too, you have GM as a major competitor to Ford, and you have other types of car brands too that are home based. So the competition is tough. The cost, the entry cost is high, and the profit margin is low. So when we decide or intend to invest in any particular company or stock, these are some of the things that we should have in the background in our perspectives that help us make an informed decision. So I'm going to move on to the metrics, and specifically I'll talk about the PE ratio and the PEG ratio for Ford. The PE ratio is the price to earning, and what it measures is like how much are we, the consumers, paying for $1 of revenue that the company makes. So in the case of Ford now, from the sources that have consulted, the consumers are paying about 14 point something dollars for $1 of revenue. You might say this is much, but this really not too much, even within this type of industry. In some other industries, especially in the tech industry, we're actually paying something to the magnitude of 30, 40, 50, 60. For example, for Palantir, which is a hot stock in the market now, consensus is that the PE ratio is about 200 to $1 of profit or $1 of earnings. But the important thing here is that it is growth that kind of makes decide whether this premium price is good, is justified or not. If the earnings are growing and the revenues are growing, and all of these things are going very good, and there's a long runway for the company, people are willing to pay that much. But but again, you have to try to not compare apple to orange, and look at the industry, look within the industry to see what its peers are, the PE ratio for the peers are, and that's going to help you much. The PEG ratio is another thing. The PEG ratio, the favorable ratio is 1, and when it's anything below 1, less than 1, is considered very good. Like there's a lot of value in the stock, and there's a greater chance of the investors making good profits or good returns, good ROI from their investment. But when the PEG ratio is greater than 1, then it's considered to be an indication of trouble or indication of overvaluation and so on. With respect to Ford, I've seen a lot of fluctuating or conflicting reports. So the most attractive one puts it at less than half of a whole one, i.e. something in the range of 0.3 something or 0.5, and others put it far above 1, like 1.6, and others even put it much higher. I could say that I know some of the things that are factoring into determining the PEG ratios. Ford has had a lot of issues recently: recall, tariff, pivoting here and there, sometimes to ICE, like internal combustion engine, back to EV, from EV back to hybrid, and what looks like an instability, directional instability in with the management. They may be factoring all of those things, and that may be affecting what the kind of number they come up with. But there's some type of consensus that this remains a popular brand, and this remains a very strong company, and the CEO remains like a kind of a dynamic CEO. So with that, let me talk a little bit about the CEO and some of the issues that are coming up recently. The first thing that I would like to share about the CEO is the way he's come out to talk about the impact of tariff on his company. He's let us know that Ford actually stands in a much better position than many other American auto industries, because the majority of the parts that are going into the production of Ford are sourced from America, much more so. Much more than any of his competitors like GM, and they have put a monetary figure on what the company is like, what kind of shortage is going to happen to the revenue, and it's like billions of dollars less than what is estimated to be the loss, or the for other expenses uh, that is likely to be incurred as a result of tariff. Meanwhile, tariff itself is like something that we really can use to measure the future of any of these countries now, any of these companies now, because tariff itself is going through um, um, its own volatility. The president who's using the tariff keeps changing his mind, or he keeps being feeling the pressure, or facing demand from auto industries to do something to help them with this, so that they can stay in competitive mode with the Chinese companies. So that's something that we really can use that much, that much right now. So the other thing is that Jim Farley is so much like a couple of things that I've learned about him. For example, um, uh, he's encouraging young people to to come to the industry as technicians, as mechanics. He himself is called a car guy, because he started as a mechanic, as a technician, as he knows he rose through the rank and file, and he knows, and he has a hands-on boss. And also he's also encouraging them by when they had a complaint, he increased their salary, and he made them feel good. I think that's good for a leader. That kind of leadership is what it is important at this time, when we are trying to boost our manufacturing capacity, because what we are facing is not just parts coming from abroad, but also technical expertise also. It has been confirmed, it has been established that we are short in that aspect too. And for somebody like him to come out and try to promote that idea, I think that's something very good. The last thing that I want to say about him is kind of funny, because he went to China to attend an EV event there, and he bought a Chinese electric vehicle, a small size Chinese electric vehicle, and shipped it back to America here. So I said, what kind of message is this guy sending? Does it mean that we all will be using Chinese electric vehicle sooner than later? But he defended his action by saying that this is the competition and we need to know about it. The thing is that I'm afraid that it could be charged with trying to copy American engineering, or American manufacturing, or whatever. So, but I think that's something very audacious from him. So the last thing is that right now he's making partnership with companies in Europe and some other places, which is like an attempt to really maintain the international outlook of Ford, because I can tell you that Ford is there in Africa, Ford is there in Asia, Ford is there in the Middle East, Ford is there in Europe, and it's just like more than any other American brand. I've seen that for myself. I'm kind of my own high witness to that. So right now it's picking up this interest and this effort, and is doing a great deal about that. So in the next couple of quarters, we see how this play out. And the more important thing now is that we're going to be having rate cuts. Probably we're going to have one this June, and probably we're going to have a second one before the end of the year. And there's going to be gradual easing of the interest rate, and the money is going to come back for consumer discretionary items like cars. We hope that he's ready then with either his work on hybrid or his EV pivot or a combination of both. And I personally would like to keep my investment, and if possible, increase it before we begin to see the price action improve. Again, this is not you do your own, and you do your own research, and you do your own make your own decision. So let me conclude with a brief scriptural insight or advice. In the Quran, in the chapter of repentance, verse 122, or in the Quran again in the chapter of the people who deal in fraud. I'm not going to cite the text, but those gave me inspirations to think about two things. One, myself as a religious person or religious leader or religious scholar or whatever you call me, I have a challenge. I feel the challenge to go out and find a niche within the broader scholarship, within the broader jurisprudence. Find a niche where you want to develop your skills, your knowledge, and your talents, and answer some basic questions and provide some useful information about something, bearing in mind that from a scriptural perspective. Trying to pivoting into the stock market education comes from that perspective. The perspective that I'm gaining from Quran 83 is also important. First and foremost is about honesty in dealing in financial transaction and in business. And perhaps more importantly is the idea that if you really want to be successful in trading, successful in business transaction, you have to aim at creating value for your consumers. You have to creating value and benefit for your consumers, because that's what will keep them. When Jim Farley talked about Chinese electric vehicle, he said they are tech savvy, they are efficient, and he poured accolades upon them. That's what's going to win the market. Is not, and there's nothing anybody could do much about that. That's what we have to aim at. And I really appreciate your giving me the chance to share these ideas with you. God bless you. I'll see you next time, God willing. Bye-bye.